What is going on, investors? Back again, another stock analysis. Today, we're going to look at Microsoft Corporation, ticker symbol MSFT. This is a stock that we've gone over here on the channel, and is a stock I've been dying to try to get into. Obviously, I should have maybe bought some shares down in this level, but boy, it rebounded so quickly. Congratulate yourself if you bought it down in these lows. Now, this company reported earnings last night, and as you can see, the stock didn't really react very well to it. We'll go over the earnings here in just a second. I'll take you through all this month's numbers, and we'll also take a look, just some news that's being made. I'll give you some analysis on that, and I'll also tell you if I would buy, sell, or hold this stock based on what we're seeing here. Now, what ended up happening, I think, with Microsoft, with Tesla, with Apple, with Amazon, a lot of the good news was pulled forward. I think we definitely saw this with Netflix as well. I posted a video of that here on the channel as well. A lot of good news got pulled forward, and a lot of these stocks just ran up in this kind of V formation. And now, once we're starting to read the press releases and read the earnings, we realize a little bit clearer picture on what's going on with these companies now. So what's going on with Microsoft? We still got a fairly reasonable PE ratio. I guess it depends on what you think is reasonable, but at 33 times, it certainly is not out of whack when you compare it to maybe some of these other stocks as well. The dividend yield has been pushed way super low here because this stock has run up. So you're getting less than 1%. So you're not really investing in this company for the dividend. But the good news is this company is growing earnings, which, like I said, we'll touch on here in just a little bit. So moving on to some news, I actually found this really interesting. So Slack, which is a competitor to Microsoft, they're filing an antitrust suit in Europe, and now they're trying to do that in the US. What I thought was interesting was when this news came out, Slack shares actually went down and Microsoft shares went up. And I think the way investors are interpreting this is actually that this is a sign that Microsoft is actually competing well with Slack, and Slack feels the competition. I wouldn't say this is like Slack waving the white flag, but instead of trying to invest in R&D and marketing, they're just calling their lawyer in that type of situation. And so it could be just Slack is realizing that Microsoft has a competitive product with them, and they're trying to kind of front run that and maybe win a court battle or win some regulation battle. I don't know how these things turn out. The only thing I do know is Microsoft business is extraordinarily diversified, so they could do without their Slack competitor or not. Slack, if Microsoft does have a good competing product and it is good and people use it, well, guess what happens to Slack? It's not going to be a very good stock. Moving on, let's take a look at the 3 months ended here, and we've got 12 months ended here. Again, this is Microsoft. We got the 3-month view here. Product revenues ticked up nicely, both on the 6-month and the 3-month. That's nice to see. Service revenues ticked up nicely. We went over in my previous video on Microsoft how great the margins are. Look at this. They spent $4.3 billion to make $18 billion on product. They spent, we'll call that $8 billion to make, call that $20 billion on service. I don't know of a lot of companies. Adobe, this kind of reminds me of Adobe, but Microsoft has this product revenue in here as well. That's just incredible margins. This is why this stock, if this stock is not in your portfolio, and it might be through an ETF or a mutual fund or something like that, but if this stock is not in your portfolio, I would look to add to it because, man, these are just incredible margins. We're in a tough environment for businesses, which is a lot of what Microsoft sells to, and they're still doing really well. We see here the gross margins, nice tick up for the quarter, and nice tick up for the 6 months ended as well. Move through some of these other expenses here. We got R&D, marketing, and general administrative. We'll just flow right down to the bottom line here, this net income. Notice that net income actually ticked down just a little bit. So they had to increase some cost here a little bit, and it could be R&D related, could be selling and marketing. These all ticked up just a little bit. And it did impact net income. We see net income down here was 11.2 compared to 13. But we are still solidly up over the last 6 months as well. We see share count came down just a little bit as well, so maybe they strategically bought some shares back as well, which is definitely beneficial for you as a shareholder. Moving on to the balance sheet, this is a company by all means is very healthy. We see $300 billion worth of assets, and that compares nicely to the previous period. Here's what I want you to learn on this, okay? I know a lot of you guys watch these videos, you're looking for tips maybe on the stock we're covering, but what I try to do is give you a little bit broader view. Here's something really interesting right here. Look at this accounts receivable, and this is for every company has this if they have accounts receivable. So they do a net allowance for doubtful accounts, and I want you to notice here, it went from 411 million in the previous period, which was June 30th, 2019. And now look at it, it's up to 788. Now, 788 million in the grand scheme of things to Microsoft is like a $20 bill basically to them. But this doubled. And so what I want you to take away from this actually is a sign of a more macro, broader economy thing. Look how many businesses are struggling. Okay, I would guess most of this is business related. So businesses had accounts with Microsoft for whatever reason, and compared to last year, obviously they're in much bigger trouble this year, and they're not going to pay their accounts. Again, for Microsoft, it's not a big hit. For most companies, it's probably not a big hit. But in aggregate, if you take this accounts receivable across all the S&P 500 companies and they're all doubling it, well, guess what that says about the broader economy? It's probably struggling. And I think if you watch this channel, you realize that while the stock market is doing great, stocks like Microsoft, even after today's 4% pullback, are doing awesome. But there's a lot of struggling business out there. And this is really granular data that you can look at and you can start drawing conclusions from. So I really like that, and I just wanted to point that out to you. Microsoft is lowering some of its long-term debt. It might come up into current portion of debt a little bit, but yeah, it looks like they're paying down their debt. This is a lot of, quote unquote, a lot of debt, but at the interest rates these guys borrow at, I would call this quote unquote free money because, X out inflation, and they're really getting that money for a very small amount of capital in terms of interest paid. So just a really solid quarter. Let's quickly take a look at cash flows. Okay, so I showed you that net income dropped here. So net income went from 13 down to 11, but cash flows were still really solid. And if we look at the 12-month ended here, cash flows are still really solid and they're going up. So where would I buy Microsoft? I think I'd tip my hand a little bit. I want to buy this stock. And so this stock is a lot like Netflix, a lot like Tesla, like Apple and Amazon. It has made a parabolic move here to the upside, crushing these previous highs that it had back here in February. What I like to do is wait for stocks to start making like what I call kind of a base, or kind of go flatline just a little bit. You see, you look at this graph, it's just trending up. So it really wouldn't matter where you bought if this is how the company's going to keep going. But for me personally, I like to inch in, especially when we're talking about $200 a share. I probably want about 10 shares of Microsoft, but I don't want to buy all 10 at once because I think it leaves you a little bit exposed. If you buy 10 shares at $200 and this stock retraces back to the 150s and 160s, well, then that's a significant haircut that you've taken, and it might take a little while for that stock to come back. So what I like to do is inch into stocks like this, and so I like to see them trade sideways. We see here the stock trades sideways here for several months here. It traded sideways and kind of went down here. It traded sideways here. So you'll have those times. Just be patient with stocks like Microsoft, okay? They will have these days where they pull back, and just be ready to pounce. Obviously, I should have been ready to pounce here, but I had other stocks in my portfolio that I was jumping on as well. And anytime you see this type of dip in a stock, I think it should, in quality stocks, I should preface that, like Microsoft, you probably should be ready to pounce, because look how quickly this thing snapped back. Now, the price I would be looking at for Microsoft, I like it here in this 180 to 190 range. If it comes back to about 190, that's probably where I'll start a position, with the anticipation that it could get back into kind of the 180s. I think worst case scenario, maybe even the 170s. So I like it much more there than at this $200 level. I think this quarter was in line. I think we're going to see more inline quarters. I think most of the Xbox, positive news about Xbox, positive news about anything that Microsoft has going on is already priced into the stock. So I'd like to see it pull back to this 180s. I will definitely buy it if it pulls back into this range, depending on obviously more broader economic and macro environments. There might be a situation where I don't buy it, but all things being equal, this stock pulls back to this 180. That's where I'm looking to get it. And if I'm getting call it a 10 share position, I would definitely open up with like, call it about 3, maybe even 4 shares at this 180 mark. I think I'd be a little more aggressive than normal because I think I like the upside. I think your downside is probably only in the 170s there, and your upside is probably back up to new highs, 215 and beyond for Microsoft. Gotta love this company. The financials are absolutely sensational, and this is a company that has got competitors really worried about it. So it tells you that they're probably doing some things right. And obviously their balance sheet and their reputation leads to all that. So hopefully you guys enjoyed this video. Hit that subscribe button if you like what we're doing here on the channel. I'll be back again. Lots of videos over the next, if you don't like videos about stocks, I wouldn't subscribe to this channel, because over the next month or so, I should be having a video almost every day, sometimes twice a day, as we get these really busy days with lots of stocks reporting. So I'll try to get as many as I possibly can up and make them as quality as possible. Thanks for tuning in to this one. We'll be back again. Good luck with your investments.